morning, friends. I'm Kaustubh Pawaskar, Deputy Vice President with Fundamental Research Team of Sharekhan. Today, we'll be speaking on FMCG sector and one of its topics, Dabur India, which we believe that will do well in the coming years, both in terms of fundamentally and in terms of its performance as well. So, Indian FMCG market is currently reeling under the pressure of inflated input prices and slowdown in the rural demand. However, these are short-term headwinds, while long-term growth prospect of FMCG market is immense, with large shift to branded products due to the improving demographics and under-penetration of most of the categories, and emergence of new channels such as e-com and fast commerce will help FMCG companies to achieve consistent growth in the coming years. So in this space, we like Dabur India, which is one of our preferred pick. With wide range of products based on Ayurveda and natural format, Dabur has able to create a unique market positioning for itself in India and overseas market. It has a leading position in categories such as packet juice, chyawanprash, honey, facial bleach, and air freshener in the domestic market. Its revenues grew at a CAGR of 8% and 11% over the last 10 years, that is from FY 2012 to FY 2022. But there were some, over the last 10 years, the performance was impacted by multiple factors such as implementation of GST, demonetization, and also last 2 years were impacted by pandemic, and because of that the growth was little moderated at 8% revenue growth and 11% PAT growth. However, we believe that under the new leadership of Mr. Mohit Malhotra, the company is focusing on achieving consistent double-digit revenue and earning growth, and it has its strategies and levers in place. So the company, we have seen for past few years, has been consistently gaining market share in some of its highly penetrated categories like shampoos, toothpaste, hair oil. The market share has been going up over the past 5 years, and it is a consistent improvement in the market share. In fact, in the toothpaste, in natural space, it is one of the leading brands. Also, company is focusing on expanding its rural reach. So currently, it is the company's presence is almost in 1 lakh villages, which it expects to further improve in the coming years. As I said, that penetration in the rural India is quite low in some of the categories, and that is what most of the FMCG companies are tapping into. And also, Dabur is also doing that only. Though Dabur has 50% of its revenues coming from the rural market, the contribution of the rural India is expected to move up in the coming years, and that will also drive its revenues in the coming years. The third important driver is playing on the multiple channels. So as I said, that e-commerce is one of the important platforms which emerged in the post-pandemic era, and for Dabur especially, the revenues from e-commerce now has gone up to around 10% from 2 to 3% prior to the pandemic. And as a platform, what Dabur is looking at this platform to be used as a platform to launch new products, multiple products. So they will test market these products on the online platform, and then they will slowly or gradually launch into the general trade or modern trade. So new product launches contributes around 11 to 12% of the e-commerce channel, and the traction for these new products as well as some of the products which are already there in the market are quite good for Dabur. Another big play which Dabur is focusing is on the food and beverages segment. So beverages segment after pandemic has done well, and it has consistently grown for Dabur. But Dabur, what has done is they have launched multiple products into this space. In fact, they have got into the drinks space. So beverage market, which was around 1,800 to 2,000 crores for Dabur, now it has gone up to 9,000 crores because of the multiple launches. And also now they are planning to get into the non-carbonated food drink space. So this particular segment is expected to grow substantially in high teens for the company, and the market share has also gone up substantially in this space over the past few years. Another big space which company is focusing on is the foods, and in this space, the company has recently acquired Badshah brand, which is a one of the strongest player in the spices and the condiment space. And because of this brand, the foods revenues of Dabur are expected to go up to around 500 crores over the next 2 to 3 years. So there are multiple levers which will help Dabur to drive consistent revenue growth in the coming years, which will be in double digit. And along with that, with better operating efficiencies, better product mix, even the margins are expected to move up consistently. So currently, Dabur EBITDA margins are hovering at around 20 to 21%, which are expected to move up in the coming years. So overall, Dabur is quite focused, and they have its strategies in place to drive consistent double-digit revenue and earning growth in the medium to long term. In terms of valuations, also the stock has underperformed the broader indices in past 1 year, and it is trading at a attractive valuation of around 38 times its FY24 earnings. So considering its attractive valuation and future growth prospects, we believe that Dabur is one of the best picks in the FMCG space, and we have a buy recommendation on the stock with a price target of 675.